Have you ever been frustrated by the fact that you applied for a loan and were rejected? Maybe you were underage or didn't have a credit card score or already have a student loan on your head. Whatever the reason may be, you can now apply to get a loan even if you are a 10-year-old with a mountain of debt on your head. The answer is decentralized finance. Decentralized finance is revolutionizing the financial industry. In this video, we will go over common questions of decentralized finance and how it is different from our traditional centralized institutions. We will answer common questions like, where is the money stored in a decentralized system? And who is ensuring that the system is functioning smoothly? And how is my money safe if there is no single authority guarding it? Before we jump in, make sure to hit that subscribe bell so we can keep answering your questions related to the blockchain. The centralized finance system is where a central authority, such as the government or bank, controls money flow and makes decisions about it. They are free to print more money, which will devalue your savings in the United States. They can reject your borrowing requests for any reason they see fit, like being underage, having a bad credit score, or already having a loan. Most importantly, they have the authority to cut your access to the money that you have deposited with them by freezing your bank account. Centralized financial institutions are expensive to use, especially if you look at credit cards or personal loans where rates can be as high as 300%. The bank charges you a premium interest rate on your borrowing for two simple reasons. Number one is that the bank incurs expenses like paying for its workers and support staff, maintaining the bank branches, etc. All of these are paid from the cumulative interests that they earn from their loans. Reason number two is that previously you didn't have many options for financing. If you want a loan for your house or car, you are bound to go to a bank. Now, what if I told you that there was an extremely cheap and more accessible financing option called decentralized finance? With this option, you can borrow money for lower interest rates regardless of your age or credit history. Decentralized finance is a revolutionary financial ecosystem that runs on code commonly known as smart contracts, which do not require any supervision to function. Since no human oversight is needed, taking a loan with a DeFi lending protocol becomes incredibly cheap as there are no costs. It's like a bank that runs without any staff. There are a total of 4 pillars of decentralized finance, and we will go over each in detail one by one. First are stablecoins. Stablecoins such as USDT, USDC, and BUSD act as a bridge between centralized and decentralized finance. They are pegged one-to-one to the US dollar and are used to convert your fiat currency to cryptocurrency and vice versa. Whenever you want to buy a cryptocurrency, you first need to convert your fiat currency to a crypto stablecoin and then buy your desired crypto with these stablecoins. Similarly, every time you want to withdraw your crypto gains, you need to convert your crypto to stablecoins and then withdraw them as fiat currency. The next pillar of decentralized finance is borrowing and lending. When borrowing with your local bank, you need to submit 1,000 different documents like proof of residence, identity, etc. before your loan can be even approved. On top of that, you incur heavy interest on your loan amount. It's like paying the bank to exploit you. Loans with decentralized crypto banks like Aave and Compound are straightforward. When borrowing with crypto banks like Aave, your identity remains anonymous, and the only consequences for defaulting are getting your assets liquidated. If someone wants to earn interest on their crypto, they can deposit it into the smart contract of a crypto bank like Aave or Compound. Once deposited, the smart contract will give you A or C tokens for the equivalent value, which you can use anytime to get back the money you have deposited into the contract, plus the interest you have earned on your deposit. Once deposited, the smart contract goes out and finds people that want to borrow your money and release your money to them with an interest rate. When you want to withdraw, you will exchange your A or C tokens for your deposit in the smart contract, like codes on a website that run automatically. Smart contracts are pieces of code that can run without any human interaction or supervision. If a specific condition is met, smart contracts will carry out the necessary functions that your local loan officer does. These crypto banks over-collateralize your loans to ensure that you never lose your money. This means that the borrowers need to deposit a higher amount of collateral than the loan they are applying for. This is done to ensure that lenders keep their investments safe and earn interest on them. A unique concept with decentralized finance is flash loans. These loans last for a few seconds and give you the chance to make a quick buck due to price fluctuations on different exchanges. For example, suppose Ethereum is for $3,000 on Coinbase and $3,010 on Gemini. In that case, you can literally make an extra dollar on each Ethereum sale by buying from one marketplace and selling on another. The best part of flash loans, you're not even required to put any money down as collateral. If you cannot complete all the transactions in under 10 seconds, the money will never leave the crypto bank. The third pillar of the DeFi space is called Decentralized Exchanges, or DEX for short. Fees are meager when trading from one cryptocurrency to another using a decentralized exchange. Decentralized exchanges also give exposure to far more tokens and coins. With decentralized exchanges, tokens are only added for trade once they reach specific regulations set by the exchange. However, decentralized exchanges can hold hundreds or thousands of coins because no one regulates them. Our next pillar is insurance. With car insurance, you pay a specific amount every year to protect your car. The insurance company runs some numbers and determines a premium for you based on their data. With decentralized finance, smart contracts become the insurance company. For example, if a farmer buys insurance through a smart contract for his crop and dies due to high temperature, he will be repaid by the smart contract. The smart contract knows the temperature by connecting the real world to the blockchain using oracles, which can be the topic for another video. In short, oracles feed real-world data into the blockchain, which is then analyzed by the smart contract. The smart contract knows the temperature limit, and once that limit is reached, the contract will automatically release insurance money to the farmer. With these revolutionary mechanisms, there are millions to be made in the world of decentralized finance, and people are starting to move into the space. 2022 will see a lot of investment into DeFi, and if you're looking to make money, you should look into decentralized finance. As with all of our videos, we must reiterate that we do not offer any financial advice. And if you lose your money in the DeFi space, don't come crying to us. To stay updated on revolutionary technologies being built on the blockchain, make sure to like this video and subscribe to our channel.